Hey guys, it's Joe. Just a little update on our trading style and what we look at, the nuances. One is the options market. Okay, in our opinion, the VIX is higher, option prices are higher, so we are not buyers of options. Okay, we've been trading since January for this year. Once this year, we bought options. Okay, we bought some calls on something because we think they're mispriced. So if they're mispriced to the buyer, whether you're buying a put or you're buying a call. You're not going to get a fair price. So what do? We look to sell options into our positions. If we have a longer term view, we'll write a covered call. Shorter term, we have an options boot camp that'll teach you. But once in a while, you find something that's mispriced. Now, I don't know if you know how to look for them. I was taught by the best on how to look for them, and we found one. We bought an option once this year. AWK, American Waterworks. We bought this a couple of weeks ago. And you can see the market moves, but when you get an opportunity to see something, and these windows are small when something is mispriced. So when the market extended down, we looked at AWK when it was right around here. And in our opinion was the options were poorly priced. They were underpriced. We never seen this. We grabbed something. We grabbed something right here, watched the market just get back in line, and we watched the options double. Then we watched the next day as the stock got back in line and the options tripled. So we bought a stock here, and one day later, we sold it for $3. We bought it for $1, sold it for $3. Sold an extension up here, sold another piece for $3. That's the advantage. But in our opinion is, if you're a buyer of options and you started this year, you tell me if you're up money. I think it's pretty strong that you aren't. Another way, tell me what you think you would have made and look at what you did make, because the extension or the overpricing, if something is worth $1.50 and you're paying $2 for it, people will say, well, I don't want to buy a $100 stock. So I'd rather buy an option for $2. But if you're paying 50 cents away, look at the leverage you're giving away. And then when they start to work, you're going to get underpaid when you got to cash them, because then the premium comes in. Okay, so there's two ways to look at not being paid fairly. We don't think there's an opportunity in buying options, at least in the next couple of months and through the summer. You want to join our boot camp, or you want to look at the group the way we look at things, it's a big, big edge in understanding the option market.